Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. Taking a quick look at Lululemon Athletica Inc. This is a Canadian company that sells yoga pants and other stuff that people like, really moving into the men's space, moving into the international space in recent years and doing a pretty good job at that. This is basically a retail play, an omni-channel retail play, and I don't have a lot of exposure to that in my portfolio, so I wanted to add this to my watch list, especially after the stock was down quite a bit after lackluster earnings in Q4. But I won't get too excited about something that's down 15 to 17% just because it's down 17%, because it basically brings you back to like October prices, not a huge deal. And if anything, the expectations for growth that we had in October are a bit better than they are now. So maybe the stock price should be a bit lower than it was in October, despite the fact that they're obviously making a bit more money after earnings, etc. So the stock itself has had some ups and downs, but it's done a pretty good job for shareholders, especially if you've owned this for quite a long time. Has been a real killer that just exploded in the last couple of years. I think it benefited a lot from the pandemic and after the pandemic, as people started to do a lot more stuff outdoors after the pandemic, and the omni-channel players really benefited from the ability to go shopping online when people were at home, but then also get into stores when people were not at home after the pandemic lockdowns lifted. So what do? They sell yoga pants, they sell men's stuff, they sell women's dresses, a lot of athletic stuff in general. They've moved into accessories and shoes in recent years, and their move into men's has been relatively successful. And this is a really good brand, I think. They have a really good brand cachet. When I went to the mall sometime in December, sometime around Christmas, or maybe it was after Christmas. The fact that this was the only store that actually had lines to get into it, the store was so packed that they had people lining up outside to wait to go inside to do whatever it is they need to do inside the store. It really surprised me and made me take notice of the brand itself. Then a couple months later, when I was looking for a pair of pants for a work trip that I took not too long ago, somebody at work told me that everybody in the office is wearing these Lululemon ABC pants. And I didn't even know that Lululemon made pants, but I bought a pair and they're actually really solid pants. And that's two pieces of information that I like to look at that kind of gets me interested in the stock, and then I'll see if it makes sense to buy something from a valuation perspective. If people are talking about a brand, if people are excited about a brand, if I experience the brand and it's pretty good, kind of gets me interested in something. And one of the things I sometimes look at too is I'll go to like the subreddit of a brand, because if a subreddit has a lot of subscribers and there's a lot of super fans and they're talking positively about a company, then that's a good sign as well. Lululemon, for example, has about 500,000 subscribers to their subreddit. That's something compared to something like Nike, which is about 1 million subscribers, and Nike has 3 times the market cap, but also 3 to 3.5 times the earnings of a company like Lululemon. So that's just one data point that obviously isn't financial in nature, but something to look at and something that I like to look at sometimes. One of the things I noticed on the subreddit, though, is that people have been talking about the quality of the stuff from Lululemon being worse than it was when the brand was smaller. And that's probably common with brands as they get bigger. It's harder to make things at the same quality when you're making 10 times of it. And that is essentially what happened to Lululemon. So Lululemon has a growth plan that they established in 2022 to kind of double their revenue from 2021, which was 6.25 million to 12.5 million by 2026, and they're well on track of that. They call it the power of 3 times 2 because this is the second time they're doing it. They want to double men's revenue, they want to double digital revenue, and they want to quadruple international revenue. And I think they're doing a pretty good job of that, because in 2023, their revenue was something like 9.6 billion. In 2024, they're aiming for 10.8 billion. So clearly 12.5 billion is in their sights. And I'm kind of surprised they haven't lifted that up already, because it's pretty clear that they're going to hit 12.5 billion by 2026. So why was the stock down as much as it was? Well, 2023 results were pretty solid, 19% growth compared to 2022, opening up more stores, up to 711 stores now. I want to say about 400 of those are either in the United States or Canada. The rest are international, maybe a bit more in the domestic markets. International growing at a really good clip, 54% growth versus America's at 12%. So what's the problem? Well, Future growth starting to slow a bit. If you look at Q1 2024, guidance is only 9 to 10% growth. Not too amazing. Guidance for the full year, 11 to 12%, but that does include a 53rd week in 2024, so 10 to 11% growth without that. So slowing growth, a bit lower than the market expected. Again, they're saying we are on pace to hit that plan to get to 12.5 billion by 2026, and I think they're going to get well above that by 2026, because if you look at their estimates, again, slowing growth, but over here you're seeing even at 10% growth in 12% growth in 24, 10% growth in 25, and then 10% growth in 26, you're hitting 13.1 billion. And that's kind of what I'm estimating as well. This is a really good business, though. If you look at their EBITDA margins in the high 20s, if you compare it to something like Nike, which is in the high teens, really, really solid. Can they improve that anymore? I doubt it. They really want to probably keep the quality up as much as they can and not skimp and improve margins. But again, as they improve their online sales, maybe they can improve margins through that avenue. Free cash flow margins are kind of up and down. Really good in 23, 17% free cash flow margins. A lot of that was because of working capital. I think they're kind of mature-ish. Free cash flow margins are going to be in that 13 to 14 to maybe 15% range, depending on free cash flow conversion. But still a really solid business. If you look at the financials, if you look at the balance sheet, really solid. They have, $2.2 billion in cash on the books. Inventory position is really good, down from 23 into 24. No debt, some capital leases, obviously, because they rent out their stores. Not a lot of things they've done with their money. They've basically bought back shares. They made one acquisition of Mirror, which is kind of that, you look into a mirror and you work out with it, that they've written down already. They're not producing Mirror anymore. Complete waste of money. So that's kind of a bummer. But at the end of the day, they've used a lot of their money to purchase shares, and they're probably going to continue doing that. As we look at the valuation, remember, video is purely for informational, educational, and entertainment purposes only. It is not investment advice. I'm just doing this for fun and kind of wanting to add this to my own, potentially add this to my own portfolio and kind of add it to my watch list if I can get to a valuation that I like. So Lululemon, $47 billion market cap company, a free cash flow yield of about 3.5% based on the 2023 actuals, about 3% based on the 24 estimates. They are buying back shares. Some stock-based compensation offsets that. As I look at the assumptions that I'm making here, 12% growth, slowing into 11% growth in the next 2 years, and then down to about 10% growth for the 2 years after, with margins starting at about 13% on a free cash flow basis, improving to about 14% by the last year that I'm looking at here. Most of the money, or about 35% of the money, goes towards buybacks. I think this is probably conservative. They're probably going to announce a bigger buyback sometime in the next couple of years, unless they plan to use this money to acquire something. Like I said, they've only acquired Mirror, which was a bad idea. I think if they acquire something, maybe it's another brand. Maybe Lululemon adds Vuori or some other brand to their brands and kind of becomes a parent company that owns multiple brands, or it just stays Lululemon alone forever. Obviously, they don't want to dilute the brand name at all. But if you buy another company and just manage it on the side, that could still work, leaving Lululemon as its own brand and then using that as a way to grow revenue and or improve margins, because otherwise all you can really do is just buy back more shares. And I suppose they could use 100% of their money to buy back shares, which would really juice the buyback yield. And maybe that's what they do. So you can kind of play around with this spreadsheet as you'd like. File, make a copy. I will leave a description. I will leave a link in the description down below. Sorry about that. As I look at the valuation here, I'm kind of looking at, hey, this is a 3 to 3.5% free cash flow yield right now. I think that kind of makes sense as the company matures, as growth starts to slow a little bit. I think it'll trend closer to 4%. So I'm putting 80% of the weighting into the 4% free cash flow yield, 20% into 3%. You can play around with this as you'd like. And with that in mind, this kind of brings it to a 5.9% expected return from today's price point at 374. Kind of mediocre. When I look at stocks like this, when I look at a mature company like this, the target return I try to aim for is about 10%, which would mean I would need this to be at about $311, which is about 16% lower than it is today. And I think that kind of, maybe you say, well, your valuation is a bit conservative, but I also worry about a company like this being reevaluated quickly if they announce that their growth is slowing. You kind of saw that with Ulta Beauty just a couple of days ago that said, well, our growth is a bit slower than we expected in Q1, and the stock dropped 15%. So as you look at something like this, getting a almost 30x free cash flow multiple compared to something like Nike, which again is a much more mature, much slower growing company, getting a 20x multiple. In the long term, Lululemon will trend towards that. It's not there yet because it's still growing at a good clip. And I think in order for this to be a good return, it has to continue growing at this good clip for at least a decade or so to kind of get to where Nike is. Again, Nike is a $140 billion company with $40 billion in revenue, 140 billion if I said million. And Lululemon is kind of a third of that, with maybe a fourth of that in revenue. Can it get to where Nike is? That's kind of what you're hoping for as an investor at today's prices, that this is eventually going to be a $40 billion a year revenue company, still maintaining its margins. And if it does maintain its margins and is essentially a better margin Nike at that point, this could be a $150 to $200 billion company, no problem. But that's years and years and years away. And as you sort of look at what's going to happen if the economy slows down a little bit, a company like this will certainly get hit because this is the definition of discretionary income, right? This is discretionary expenses, rather. This is not something that you definitely need. This is not a staple. If you have to cut back on yoga pants, you can cut back on yoga pants. If you have to cut back on expensive pants, you can cut back on expensive pants. There are plenty of knockoffs for $20 to $30 that compete with this, that aren't as good as this, that don't have the brand name, that don't have the stylishness, the color palette that these guys offer. And that's one of their things. It's stylish, it has great colors, everybody loves them, it looks good on you for the most part. There's a post on the subreddit that's pretty funny where a lady buys a piece of clothing from them and it just looks terrible. But most of the stuff looks pretty good. And I think this is a company that has a lot of potential for growth, especially outside of the United States, right? They still haven't scratched the surface in Europe. They still haven't even scratched the surface in APAC, in China. I don't even think they have any stores in South America. I think they have a couple of stores in Mexico at best through a partnership there. So there's a lot of potential for expansion, especially outside of the United States. The omni-channel approach is working really well for them. Their balance sheet is really good. They just need to keep growing, keep investing in new styles, keep essentially getting their brand name out there. If you look at their brand awareness numbers, they're known pretty well in the United States. They're known pretty well in Canada. Their name is kind of getting out there in Europe, but kind of getting out there in China and Japan, the APAC region, etc. But it's not really there outside of the United States. So there's a lot of brand awareness lifting they can do. And I think they're doing a really good job at doing that. And they're doing a really good job at expanding this business. But for me, I think I'd want this to be at a slightly lower price point for me to get into this. And, something in the low 300s would really be solid for me. Again, if you play around with the valuation, or you play around with the margins, or you play around with the buybacks, you could certainly get to a valuation that supports today's price point. But maybe I'm being a bit conservative when it comes to retail, especially discretionary retail. I'd rather be a bit conservative, and I want a little bit of a margin of safety built in through my conservativeness. So that's kind of where I'm coming from with this. So what do you guys think about Lululemon? Do you think my valuation is a bit too conservative? It's on point, etc. Do you like the brand? Do you not like the brand? What do you think about the price point here? Where would you buy it at? As always, guys, thank you for watching. Please let me know if you'd like me to look at any other companies. Leave a comment down below, like, subscribe, all of that good stuff. I'll be back with more videos in the future. Thanks for watching, and bye.